Thanks for joining the program. Coming up, we go from the macro to the micro. Shares of Meta rising after beating on revenue and their forecast. We're going to dig deeper with the head of global TMT research at Itaú BBA. Stick with us. This is Bloomberg.
I feel like we're getting to a good place on that with Threads. There's still a lot of basic functionality to build. 2 years, once we get to the point where it's at hundreds of millions of people, if assuming we can get there, then we'll worry about monetization. But I mean, that's basically the playbook that we're focused on. And
Meta CEO Mark Zuckerberg speaking there on yesterday's earnings call. Joining us now for a little bit more insight, Thiago Kapulskis, head of global TMT sell-side research over at Itaú BBA. Thiago, let's dive right in here. I mean, about a year ago, Meta was talking about going all in into the metaverse, really kind of perhaps staring a little bit clear of the AI universe and an investment that a lot of its other peers were making. Now really saying it's still all about ad spending. How long does that sustain, do you think?
Oh, it's a great question. So first of all, thank you for having me here. So it's just crazy, right? Because when we think 1 year ago, the stock was like $95 or even less, and now it's $320, right? We think there's a lot of sustainability for revenues to continue to go up. We wrote about that last night during earnings. I think there are three main factors out there, right? So number one, this is the first time, or actually the second time, that ad loads and prices, go in the same trend, a favorable trend for Meta, which I think, is a factor related to the execution that they're having, Reels monetization, which is very important. They're doing a very good job out there. The macro is actually helping, right? We were talking about maybe hard landing, a few months ago. The economy is doing very well, very resilient. That's definitely very good. And also there's comps, right? So Europe, the numbers in Europe improved quite a lot in the comparison versus last year. I think the work they've done, particularly in Eastern Europe, is definitely helping. So there's a lot in there, and we can only, applaud the execution that they've been doing over these past few months.
Yeah, and you're already seeing the shares higher just in the pre-market session by over 8% this morning. But Thiago, what happened to the concerns about the demographic, this declining demographic, this declining use of Facebook, but also by extension Instagram as well? Are those no longer concerns in this new ad boost that they're seeing?
Great question. I think, they are doing a great job on this because I think they realized maybe 2 years ago that TikTok was getting a lot of share, and one of the reasons was the recommendation engine that they had, right? So there is definitely, especially among youngsters, I think a different habit of getting more interested in content that is not related to your friends, but can come from anywhere. And that's where artificial intelligence comes into play, right? Because you just need to have the best content and showing it to people at the right time. And I think the investments they've done on AI, which are a lot related to the metaverse, but are also related to their recommendation engine and to the way, people can use Instagram these days.
Yeah, Thiago, on that point, if I can jump in, because he talked also about AI chatbots. He said agents, he called them coaches. He kind of teased some of those things on the call. Not sure completely what those are. What do you make of that push? This feels like something more kind of chat GPT-like coming from Meta.
Yeah. I think you're definitely right. I think they are among the big techs. I think it's of course Microsoft is doing a great job on AI and doing really great things. But I think Meta is probably overlooked into this things because they are adding a lot into their content. They launched the Llama 1, Llama 2 models, right? Which are actually fantastic. They're partnering with Microsoft to distribute those products out there. So I don't know. I wouldn't be surprised if they continue to innovate and bring new things to improve even more the engagement, right? And all the engagement metrics, by the way, have been improving quite a lot on Meta, right?
And it's not just new products. I mean, what I'm about to say, you could probably say the same for their AI too, but it's also copycat products. They have Threads. We started out by playing some of the sound from the earnings call when he talked about it. The sound we didn't play, he went on to say, I'm highly confident that we're going to be able to pour enough gasoline on this to help it grow. This is a Zuckerberg who not that long ago was calling this the year of efficiency. Does that worry you, Thiago, if they're going to pour gasoline, metaphorically, of course, onto the Threads product?
Great question. Even though I'm very much in favor of a financial discipline, and I hear a lot from investors, this thing. I'm just glad that Mark Zuckerberg is so confident, and I think you're putting the very right way right here, because it just sounds he's back into the game, right? There was just so much concern last year that he wasn't doing much, that Meta was lagging behind TikTok and all of that. And now, last night, I think the most important thing was his tone, his confidence that he's making Threads work. He mentioned that Threads didn't have a very large team, so it was a relatively small investment to make that work. So yes, very important. But of course, I agree that you cannot only allocate capital on things that you cannot explain, right? But all in, I'm more. I see the glass half full here.
Yeah, I mean, Meta has their hands in a million different products and different ideas. It seems part of the burden and blessing of being a big tech company. Itaú's BBA's Thiago Kapulskis, we thank you as always for joining the program this morning. Coming up, a look at some of the market moving events to watch throughout the day. We'll take you through it. This is Bloomberg.